Hello everybody, and welcome to the 6th POLIMP webinar in a series of 8 covering topics on international and European climate and energy policy. I'm very happy that you're joining us today to hear and join our conversation on the future of renewable energy support mechanisms in Europe. With me today to talk about this issue, I have two renowned experts. One is Andreas Türk, senior researcher at the University of Graz, and an expert on renewable energy policy and international policy for many years, and Fabian Wigand, who is a senior consultant on climate and energy policy at Ecofys, who's particularly been focusing on auctioning for renewable energy support, and we'll be picking up on that specific topic a little later in our conversation. Before we get started, though, let me just say a little bit about the background to the project and also about how you can interact with us as you're watching live. So the POLIMP project is funded by DG Research at the European Commission and is made up of 9 partners led by Joint Implementation Network in the Netherlands. And the way that you can join us is by using the interactive tools that Google hangout supply. You can submit your own questions, and you can also vote on existing questions, and I as a moderator will be able to see those and will be able to pick up and insert questions into the conversation as they pop up. So for those of us watching live, please use those features. But now let's jump right into the conversation. So as our viewers and listeners will know, the European Union has been promoting the deployment of renewable energy policy for more than 20 years in various ways, setting up also quantitative targets for the EU to achieve. And for 2020, we've now binding nationally differentiated targets. Member states in the EU have been largely left to decide by themselves how they go about achieving those targets. And so we've seen a diversity of support mechanisms come to life. In that process, so we've got a lot of experience that has been gained, but as the technologies have been maturing and as governments started to get a better understanding of how to use the tools, there have been changes. And we want to talk today about past achievements, but with a view to what do the lessons that have been learned mean for the future of these instruments. But to start us off, I would like to ask Andreas Türk to take us a little bit through the historical development and the key experiences and lessons that have been learned with the tools to support renewable energy. Andreas, please.
Hello, here's Andreas Türk from Graz. The European climate and energy policy is a big laboratory. So as Matthias mentioned earlier, we have a high diversity of support schemes and mechanisms. If you look back, the Feedin system were a very common way to promote renewable energies. Feedin means you give investors certainty over the revenue stream. You have a certain support over a certain period of time, and this is particularly important to build up markets. It's important for immature technologies. Another type of support is Feedin premiums. You give a premium on top of the electricity price, and here you have already market signals that are important. And it's a bit more risky for investors, but you have market signals. Another support mechanisms are tradable quota. The government fixes the quota, and the price is built on the markets. And a coming way of supporting renewable energies is tenders auctioning. And as we can see on the slide, many countries have a mix of different support schemes. So, for example, Austria has a pure Feedin, but in Germany, Feedin is being phased out and premium are being introduced. Other countries have already, for some technologies, auctioning systems. If we look back, Feedin tariffs were important to establish the markets. But we saw also many negative experiences. Feed-in tariffs have proven not to be flexible enough for cost regressions of certain technologies, and tariffs were in some countries modified and decreased retroactively. For example, in Spain, in Slovenia, in Bulgaria. So the aim of feed-in tariffs to provide certainty to investors was undermined by later changes of the level of support, and this created in some country big uncertainty to investors. Greece, for example, introduced a tax on PV producers retroactively. Currently, more and more countries are moving towards auctioning systems. This is triggered by the new state aid rules of the European Commission to move towards more market-based support schemes. About 10 countries are in a phase, have implemented or in the phase of implementing auctioning systems. Another 10 countries are likely to implement such systems before 2020. So this is my brief overview and introduction.
Excellent. Thank you very much. That was extremely useful. Maybe Fabian, I can hand it over to you, but making that a very specific question. So Andreas has just outlined, the developments and mentioned a couple of the drivers for change. Experience with the policy, changes in the political system and preferences, and the drive by the European Commission. What, in your view, what are the most important drivers for the recent, change in the focus of policy instruments to support renewables?
Thank you very much. As Andreas mentioned, there are really some very profound changes ongoing currently. And we can see them that on the one hand, they're very much really triggered by the European Commission, particularly by DG Competition, which seems to be play a much larger role now, ensuring that market principles are being followed in renewable energy support. And this is both in the terms of premiums and auctions. So countries can still, in certain cases, have exemptions from these rules. But in general, there's a very strong trend for countries to introduce more market-based mechanisms. On the other hand, we can nevertheless also see that there's certain changes also coming from within the member states. And this is that in some countries where we had in the past strong boom and bust circles of policy support, meaning that the support levels were either too high and then they were changed and they were too low, and that they really disturbed markets a lot and led to very high costs for consumers. So the idea is that through tendering schemes, on the one hand, you want to introduce more market-based mechanisms also in the setting of support levels to make them more independent from lobbying influence, for example. And on the other hand, you want to have more control actually on which volumes are built up and which technologies are being built up. And this, we can also see that even countries that in the past were extremely generous in their renewable support and have very high levels and high shares of renewables already, for example, Denmark and Germany, that they are now also increasingly looking at volume control to simply ensure that renewable energy build-up is keeping pace also with system integration. So that's, I think, we can see as a key driver here.
Excellent. Thank you very much. But let me maybe come back to the first point. So you explaining the motivation behind the European Commission's drive. Could you, expand on that a little bit? Is that the determining driver? You mentioned it first. And what do you make of the underlying reasoning motivation? Do you agree with it?
I mean, it's interesting that suddenly we are kind of back to the debate of harmonization and convergence in support schemes that have academically always been ongoing, but there seemed to be very little happening in the real world. And suddenly we see kind of a harmonization through the back door now, where suddenly DG Competition is actually dictating a certain harmonization of support scheme or types of support at least. Whether that's positive or negative, I think it really depends on how these schemes are being implemented, because on the actual implementation, for example, on how an auction scheme is implemented or how a premium scheme is implemented, countries have quite a lot of leverage and have quite a lot of room to maneuver. And I think later in the discussion we can also see how good support, how good design elements can actually ensure that no matter which support scheme you actually introduce, you have to tailor the support scheme very much to local conditions. And in that regard, the European Commission seems to be quite give you a lot of leverage. Interestingly, another thing is that the technology neutrality, which would be quite a strong dictating point. I think there has been a lot of debate in Europe recently whether the DG competition state aid guidelines are pushing countries towards technical neutral support schemes, and I think this is a fear that has not been realized in the end, because what we see currently is that the DG competition, they moved away from the very strong notion of technology neutrality, and they give, as long as countries can argue for technology-specific support, can give countries a lot of leverage to also have technology-specific support. So I think this is something where maybe also, yeah, the fears of harmonization were being a bit overestimated. In other ways, the way of how the support scheme or the general support scheme is promoted by or dictated in a way by the DG competition, I think there we can see really strong harmonization.
Thank you very much. Andreas, actually, I'd like to get your take on this also. You know, do you share sort of Fabian's assessment? Do you have something to add to that perspective?
I think there are several arguments for more harmonization across of support schemes across Europe. We have one common European market, and we have so different support frameworks. So investors face very different frameworks in each country. And I think as we're harmonizing many other areas in Europe, for example, we have one common currency. We should also harmonize the frameworks for investors that operate in several European countries.
What I want to, I'll show you a little slide now, an extra slide that shows results from a survey that we're doing under the POLIMP project, which has regular SNAP surveys that represent the opinion of a group of select experts from around Europe, and we asked them recently what they make of the drive towards harmonization. We try to tease out what they make of the current drive under the existing circumstances, with the drive largely organized through the European Commission and the state aid guidelines, and what they made of the potential necessity for harmonizing support schemes in the long run. And indeed, there seems to be a distinction that people make between the current situation and the need for better integration and harmonization in the long run. Can you, is there something, can you make sense of this distinction that people are making? Andreas, does that ring a bell for you?
Of course, everybody wants long-term harmonization. But of course, there's concern that this development may go too fast, and again, that support mechanisms may be changed too fast. So investors want a long-term gradual convergence, and no ad hoc short-term changes.
Speaking of ad hoc short-term changes, I want to jump ahead topic-wise before we delve into the current experience with auctioning in a little more detail, and confront you with a figure from a Bloomberg report of, I think, autumn of last year, which stated that in the EU, investment in renewable energy has dropped between 2010 and 2015 by almost half. And since you just mentioned the need for investor certainty and concerns over fast changes in policy, what do you think explains this relatively significant decrease in investment in renewables in Europe, and what does that mean for the future? And maybe Fabian, you could start with that.
Yes, I mean it's in a way a worrying trend. We can see this drop between 2010 2014. This halving actually of investments. I would see basically three reasons behind it. On the one hand, I mean we have, and this can be rather positive development. We see a very strong reduction of component costs, for example, for PV, right? So while we actually added more PV in that time, and overall in the world, we actually had a drop of investments in PV. So I think lowering component costs, of course, is reflected somehow in the lowering investment costs. And what is, however, worrying is that these retroactive policy changes that Andreas mentioned, but also in general uncertainty because of fluctuating regulatory conditions, that was deterring many investors to further go in renewables. And if you're looking at the type of renewable energy investments that you have, that is very high capital costs and therefore very much dependent actually on or very much affected on long-term regulatory certainty. This can be really a major deterring factor. We also have to, of course, take into account the economic situation in Europe, where cost of debt was varying strongly between crisis and non-crisis countries, right? I think, for example, Ecofys has been involved recently in the Diacor project, where we also did an analysis on financing costs, and we found out that in 2014 alone, for wind onshore investments, the weighted average cost of capital was differing between 3.5% only in Germany and about 12% in Greece. And if you look at the cost of equity, you can see a similar development. So of course, this is in the end deterring investments in many southern European member states. Not just the uncertainty in policy, but it's also in general the difficult situation on the financial markets.
Thank you. Andreas, what role do you think the conversation about the future of targets for renewable energy deployment in Europe plays in that respect?
It's an important discussion because we don't have national targets on a member state level yet. We have one common European target of at least 27% renewables in 2030. And of course, this creates also high policy uncertainty. Targets are the basis for mechanisms for such as support schemes. The lack of concrete targets gives uncertainty on the pathways towards 2030. So this may be another important driver for decreasing investments into renewables, for slowing down the development.
Yeah. Now there are also, I think, projections on, well, business as usual development for renewable energy capacity build up in Europe that are saying that actually, you know, it may well be the trend going to levels similar to the 27% target set for the EU as a whole. What's your sense? To what extent is actually, you know, a very dedicated renewable energy support still necessary as the technologies are maturing and as, for example, the component costs become cheaper, etc.? Andreas, for how much longer will we need targets like the one for 2030 to drive investments?
As I mentioned, the component costs, for example, for PV are falling drastically. So we may see also financing models that don't need government support anymore. But I don't think we're yet completely there. This is a development that may happen in the next years. But currently, support mechanisms are still playing an important role.
Maybe for myself to add on that, yeah, I mean, I write that cost of LCOEs are continuously decreasing in the worldwide and in Europe. However, we have to be careful that to also look at the revenue side, right? I mean, I agree that on the cost side we can see very strong decrease of LCOEs, and we still have very high risk levels. That has been mentioned before. So I think this is a way to tackle that how to ensure that there's more investment security and how can we reduce market barriers. So that is a way we can actually still bring down the cost of renewables by tackling the risk side of it. But the revenue side is equally important. And what we see that in many countries with increasing share of renewables and with shifting of the merit order and so on, renewables simply do not get enough compensation anymore. So there we really have to tackle this through intelligent market reform, right? We have to have more flexible electricity markets. We have to more demand side management. We have to have more European integration of electricity markets. And if that is the case, we can also see that renewables will receive a higher remuneration in the electricity markets. So I would see it. I'm a bit less optimistic on when we can phase out support levels. I think a lot of has to be done in the market reform still, actually, and in the de-risking of renewable investments.
Well, and I think the process that's taking place in 2016 at the European level, I think, shows, or speaks to the argument that you were just making, as the Commission is not only preparing new versions of the Renewable Energy Directive, but also changes to the internal electricity market design. But I want to actually now pick up the specific new type of instrument that more and more member states are using for renewable energy support, which is auctioning and tendering that you specialize in, Fabian. And as far as I know, actually, it's the kind of system that actually also sees renewables such as wind winning in competitions in other parts of the world, even against conventional sources of electricity at times. But that's not the focus of our question here. What I would like to hear from you is, what is your take on the experience with auctioning so far? What are the pros and cons of this move towards a new type of instrument for renewable support in Europe?
Yeah, I mean, thank you. I mean, in general, I think we can see a development that somehow governments focus more on both controlling the volumes of renewables being built up and of introducing market elements, so introducing levels of competitions to set the levels. And on the other hand, of course, this is having negative impacts on project developers who then have to deal with more risks. So I think in general, this is the trend we can see that simply the policy priorities have shifted a bit, and therefore, project developers will have to adapt to the new situation, particularly since it's so much also being pushed for by DG competition. I think we can see extremely quick development now in Europe. I mean, there have been very early experiences within the UK, very negative ones, because not enough projects were being realized, the NFFO auctions and so on, and then there has not been much going on. And then in the mid-2000s, some other countries, France, etc., have introduced auction schemes. And now recently we can see a very strong push towards auctions. I mean, Germany, for example, has just held its first ground mounted PV auction. They're introducing auctions for offshore wind and onshore wind schemes. Spain just had their first auction scheme in January this year. Poland is about to introduce an auction scheme, so it's an extremely fast development. Several Eastern European countries are thinking about introducing auction schemes. So this is really whether it's positive or negative in general, it's a policy trend we see now, and then it's even more important to react in this policy trend with wise policy designs, because I wouldn't say that in general auctions are positive or negative, but it's rather the question of how to design them. And then if you think about it, what are key elements of that? I mean, auctions on the one hand have to be effective, so projects have to be, that are being awarded actually have to be realized. This is even more important for volume control. They have to be efficient, so there needs to be sufficient competition in an auction scheme, and ideally prices will be reduced. And of course, some countries might also worry about actor diversity, worrying that not enough small actors can still participate in an auction scheme. The experiences with this have so far been mixed, and I think often it's still too early to say whether actually auction schemes have been successful and have been effective, simply because the liberalization periods are still ongoing in many countries. What we can see is that in general, for having high effectiveness, so for ensuring that projects are being realized, it's really, really important that you have material pre-qualification requirements often, so that projects are being pre-developed a bit already, some permits are being secured already, that financial bid bonds have to be submitted to also ensure that projects are being realized. To ensure that you have efficiency, it's really important to tailor the auction scheme to the market, right? So to tailor also the auction volume to the market, to ensure that there is no unwanted strategic bidding, to ensure that risks aren't too high for project developers. For example, in the case of wind offshore, where we have extremely high pre-development costs and risks. In the Denmark case, and this is also the case that the Netherlands and Germany are now adopting, you have a pre-development by the state, which is doing some first analysis and permits, and then later on these sites are being auctioned. So there are many ways to deal with this. And then finally, auction diversity, actor diversity. Well, this is, I think, very fragmented, the discussion about that in Europe and in Germany. It's an extremely important issue, because half of the renewables investments in the past actually have come from some types of small actors and citizens, and the question is, how can they still participate in it? And then there are different options, whether to include them still in an auction or whether to exempt them. And yeah, the design is quite complex, but it's a discussion we don't see currently in many other European countries. We might, however, see it in the future if more and more market concentration is taking place in Europe.
Thank you very much. And Andreas, what do you think of
on this? Auctioning is also a global trend. So countries around the world learn from the mistakes that we made with Feedin tariffs, and some of them directly introduced auctioning systems, for example, in California, China, South Africa. And also here we see mixed results. For example, strategic bidding, lack of competition, or underbidding. And I think Europe can learn a lot from the mistakes made in other regions, countries around the world, when designing the auctioning systems.
Yeah, let me zoom in on maybe sort of to focus the discussion now. I would like to pick up on your comparison between feed-in tariffs and auctioning. I think if I take as an essence from your report, Fabian, that basically there are many options to do it right. The experience so far is still, small, and so there is a lot of experimenting going on, a lot of clever thinking done about it. But actually, we don't really have the gold standard for auctioning design that sort of proves both efficient and effective right now. But Andreas, you seem to be contrasting that with I think, well, decade-plus long experience with feed-in tariffs that you seem to summarize largely as having been fraught with many mistakes and everybody moving on to some other instrument. Is that a correct? So if is that a fair comparison of two instruments with very different levels of actual experience? And is it really fair at this point in time to be making a judgment? Can you substantiate and expand on this topic a little bit? Maybe Andreas, you could start, and Fabian could add to that.
I mean, we have two different instruments, and they had two different goals. So we needed the feed-in tariffs to establish the market. But now as the technologies get more mature, we need to move on to a different, more market-based instrument. So you cannot directly compare two instruments with different aims.
Well, then maybe phrasing it differently. So what you're saying that the ways in which auctioning is different from feed-in tariffs, and that changes to the design of feed-in tariffs could not have helped sufficiently to compensate the differences.
Exactly.
Would you agree with that statement, Fabian?
Yeah, in a way. I mean, in the end, the Feedin tariff has been exceptionally successful in ensuring investor security. And that's what it was really all about in the beginning. I still think in countries where you have very few experienced actors and you have a very high risk profile, Feedin tariffs might really be definitely the way to go, or Feedin premiums, depending on it. So administrative setting of support levels. I feel that in countries where it's really that are moving towards higher share of renewables and where volume control becomes more important, we really reach our limits with the administrative setting of support tariffs. I mean, what we see in Germany, for example, we had this corridor where we attempted that if particularly a lot of or very small amounts of PVV would be built up, the tariffs would be adjusted accordingly, but this adjustment of tariffs took too much time. So I think it's really difficult to have good volume control without auction schemes. And I think if this is a general way we are moving in right now and actually more controlling what is being built up to ensure that there's grid integration, auction schemes could be a right way to go. However, I also think that there are many pitfalls in auction schemes. So it's really, really important to really tailor them a lot to the local market conditions and to the policy goals. Because in a way, there's a fundamental conflict, for example, between efficiency and effectiveness. And countries really have to assess how much they want to really reduce support costs and maybe also introduce technologically neutral elements and so on in it, or whether they really want to have volume control and tariff and target control. And for that, realization rates are really important. For that, you need to ask for higher pre-development, which in the end is increasing risk premiums and therefore might not be the most efficient way to do it with it. So I think it's really important for governance also to know that there is no silver bullet, but it's really a careful adjustment of the design towards both the policy goals and towards local conditions.
But if the function of really very much enhanced volume control is the key function, then I would just wonder in how many countries that is motivated by the degree of renewables in the system having reached a point where you would want to control the overall growth so that you can manage the development of your grid and your infrastructure alongside and your market design, or whether volume control doesn't in many countries actually mean political control over the cost of renewables. And so to what extent do you think this desire for volume control is actually motivated by better integration of renewables in a growing share of renewables in the system, or where is it motivated by political concerns over cost and popularity of such cost? Fabian, maybe since you mentioned this as the key point, maybe you can start and Andreas could follow up. We've lost audio there briefly, Fabian. Andreas, maybe you could start as Fabian tries to reconnect.
I actually wanted to make a comment to what Fabian said earlier, that Feedin tariffs give investor security, and we at University of Graz work a lot with European accession countries. And these countries are just in the process, for example, Serbia, Montenegro, Bosnia. And these countries are just in the phase of introducing support systems. And again, they start with Feedin tariffs because the risk is high and only Feedin tariffs can give investor certainty for the next years.
And so, what you are saying is that there is a sense of a natural progression of instruments. And I can see that argument. What I wanted to know is, do you then think one can say that there is a certain degree or extent of renewables in the system, a certain share of renewables in the system, at which a policy switch needs to occur?
Of course, there's a certain share where a policy shift is needed, where the market has been developed, or there's some security for investors, and you don't need Feedin tariffs anymore, of course. But it's difficult to quantify at this point. It may be different in every country.
Yeah. Let's just check whether we have audio back. Fabian? I'm afraid that's not the case. I'm sure maybe you could try one more time, and we go back to Andreas and say. So my question earlier was, do you think, let's say the example of Poland, which you know, as people know, have a 90% plus share of electricity from coal? Do you think in that case, and maybe I'm sort of unfairly picking on a national example, I'm just taking it from Fabian's statement on Poland also experimenting with auctioning. In that case, do you think the motivation is we have already a high enough share of renewables in the system and that's why we are moving to auctioning, or is it different reasons for choosing that instrument?
Fabian?
We don't have.
Okay, I think in the case of Poland, I think in the case of Poland, this is one of the main reasons.
Okay. Let us move to the statement that you made, Andreas, about developments in other countries.
Yes.
Could you expand on your experience in countries that are, say, outside the European Union, and you know, the ways in which auctioning is being used in other parts of the world as a main means of supporting renewables? Could you expand on your insights into this topic?
Yeah, I mentioned earlier South Africa, California, and China. And for example, in China, we saw underbidding. There was a problem with underbidding. So the price finally was too low, and projects couldn't be implemented. Or we saw a lack of competition in South Africa. Not enough market actors bidding. So, as I mentioned earlier, the success is very mixed. We don't see any country where auctioning functioned without any problems. Strategic market behavior. Yes.
Thank you. Fabian, let's try.
Working again?
Yes. So
oh, perfect. Great. Thanks. Okay, there's so much to say. But coming briefly to international experiences, yeah, I think what Andreas mentioned is a really crucial issue that in other countries we had also in the global scale, we often had quite negative experience often with auction schemes. And for example, in the case of China, the underbidding, I mean, this was also really strategic underbidding, because state-owned enterprises simply wanted to drive out private enterprises to secure market share in the medium term. And we can see similar developments currently in Spain, actually, where the prices being awarded for projects have been simply much too low. And that's why I said they really have to be tailored to the market as well. If a government really needs the awarded volume to be built in the end, it really needs to ensure that only serious bids and real projects are being bid. So for that case, for example, asking for permits, etc., that would already ensure that setting sufficient penalties would already ensure that only really serious projects are being introduced. One comment maybe I want to make is on the extremely low results of some auctions rounds in Brazil and in Abu Dhabi. In Abu Dhabi, we had this extremely low PV tariffs of I think what 4 cents per kilowatt hour. That was extremely low. We have to be careful not to overinterpret these results, because in the end we had extremely high local content requirements in that region. We had the case that for example, the PV modules for Abu Dhabi had their end assembly in the final assembly in Saudi Arabia, and therefore received extremely attractive concessional finance. So often these local concessional finance conditions are so attractive that they really can also blur a bit the auction results. So I think this can also be, it's important always to keep in mind how these low auction results have come into context.
Thank you. Could you also come back and give us your take on the question I asked earlier about the motivation for using volume control and the reasons for introducing auctioning. Do you take the volume control as the key motivator for most countries that are trying this, or are there also concerns about that are more directly linked to overall cost of renewable support that play a significant role?
I think it's both. It's not necessarily the overall cost of renewable support, but the perception that in the past often support was not set in the right way, so that they're either extremely strong windfall profits or they were set unfairly in some countries, and that's in some countries a feeling that's why auctions are being introduced. In other cases, where you can really see that for example, in the case of Denmark or Germany, where we have extremely high share of renewables already, there it's really about electricity system integration. And I think we also shouldn't forget that in the end, the state aid guidelines are actively asking for the introduction of auction schemes, right? So there also might be many countries who actually do not mind the volume control or the cost control part of it so much, but they simply want to have their support scheme renewed, and they simply need to introduce our auction scheme whether they want or not.
That maybe sort of takes me back to the European processes. As you're mentioning, the European Commission through the state aid guidelines has been channeling the further development of the instruments at the national level. What is your take on how this is now going to be integrated into a revised renewable energy directive? And do you expect that member states will be challenging the Commission on this now that maybe in the negotiations on the directive they might have a chance to do so, whereas on the state aid guidelines they have much less scope for challenging the Commission? Fabian.
To be honest, I'm not sure. Yeah, I think definitely countries will try to steer it somehow. We should not forget the strongest push for the auction scheme is coming from DG Competition, right? And there the influences of the member states in that regard is quite limited. So I don't think we will see a very strong opposition towards auction schemes. For that, also we have too many countries who recently introduced auction schemes and who have not, for whom it's much too early to actually evaluate whether it's a very positive or negative experience. What we see already now, that there's a trend that countries might seek more cooperation actually to achieve renewable energy targets, and might also be more interested in opening their support schemes or conducting joint tenders. And I think this is something that we can see that will certainly also influence the negotiations for the new directive, or is already influencing it. So I think this we can see that in general there's a high interest in sharing experiences on tender schemes, also from conducting joint tenders. So this is something interesting. And I feel that many countries are still uncertain what the technological neutrality means for them, and are quite against it. And there we can also see that many countries are already consolidating each other on how to deal with it. And however, also the recent, as mentioned before, the recent signals from DG Competition are there that they do not care so much about technology neutrality. So I think that this will soon be off the table, partly at least.
Thank you. Andreas, your take?
Yes, if I want to add on this, I think the issue of cooperation will be increasingly important. Up to 2020, we had the so-called cooperation mechanisms, because the 2020 targets were not directly based on the resource potential of countries. So sometimes countries had high targets and a low potential, and to increase the cost efficiency of meeting national targets, the cooperation mechanisms were introduced, where countries could commonly meet target by trading with RES shares, or one country could invest in another country and also import electricity and account for the RES share. But in practice, this didn't well work out. So while the cooperation mechanisms didn't work, currently several countries think about opening the support schemes, discussions in Germany, Holland, others. And this could lead to more cost efficiency and harmonization in the long term. So we're making some baby steps now that could be very important for long-term harmonization.
Excellent. As a closing question to both of you, very briefly, if you had to pick one dimension, element, factor that you could change, that you would think would make a significant difference to improving, enhancing the renewable energy support in Europe, what would that be? Would it be targets, investment conditions, support schemes? Fabian, you get to go first.
Yeah, very good question. I think from key element for me is how to further de-risk renewables investments. I mean, if we see if we see that LCEs are to continue to decrease, I mean, the key element of this is still the risk premium on renewables, and to really do everything we can to reduce that risk premium, being through clever joint sharing of risks, being through policy certainty, being through further consultation, being through the removal of administrative barriers and so on. I think this is really, really key to phase out support soon and to give renewables a much bigger role in the market.
Thank you very much. And Andreas,
I think it's too early to give up target on a national level. I think we still need national targets to trigger REST deployments.
Thank you very much. Thanks to both of you.
Thanks to you, Matthias.
For joining, for sharing your insights and experience and expertise with us. And thanks to our viewers live today as we were recording, and those that are going to be watching or listening to us later offline or on YouTube. So please come back, join us for rewatching past POLIMP webinars or for future webinars. The next one will be featuring effort sharing of the greenhouse gas target for the EU for 2030. So watch this space. Thank you very much, everybody.
Many thanks. Bye.
Thanks.